trading with cuts of about 0.3% or thereabouts. The broader market's also off the low point of the day. In fact, heading towards break-even point, or rather yesterday's close point. And the Nifty small cap only down about 0.2% or thereabouts. In fact, let's pull up the breadth and see how the advanced decline ratio is looking right now. It's been quite a topsy-turvy session from a period very shortly after open where you had more declines than gainers. Right now, it's more or less even Stevens on the advanced decline ratio. And in fact, let's look at some of the key contributors. Let's look at the Nifty 50 and see what is moving right now. And you have Larsen & Toubro right at the top, gaining about 24 points, or rather contributing about 24 points or thereabouts. You also have HDFC Bank in the top list that is proving to be supportive of the benchmark right now. On the losing end, you have the likes of Axis Bank as well as ICICI Bank. Axis Bank, of course, reacting to numbers. And if we can pull up the intraday chart for Axis Bank, it will show you that it is trading with sharp cuts today. In fact, is one of the worst performers among the large caps today, down about 6.5% or thereabouts. Quite a miss on the asset quality front, though the bank has managed to keep its net interest margins very close to that 4% mark. The provisioning number has been much, much higher than was anticipated, and as a result of which the bank is bearing the brunt of that. Let's talk about the sectoral movers as well. And in fact, early on in the session, you had only the Nifty Media Index that was gaining ground, but that picture has changed somewhat over the last couple of hours or so. At this juncture, you also have the oil and gas space as well as auto and energy that are gaining ground. Among the losers, you have the Nifty Bank that is the worst performer, or one of the worst performers. You also have metal losing about 1% or thereabouts. And that metal pack is in focus because of a Supreme Court judgment that relates to mining, and it's upholding the state's power to levy tax on mineral-bearing lands that has a consequence on miners and the likes of Tata Steel, JSPL, JSW Steel. It could mean higher costs for these companies. Mining companies may face additional royalties. That's the perspective that we're getting right now. And that is, of course, visible in the prices of the stocks in the sector. We will get you an update from Sunil Prabhu from the ground when he joins in. We're just lining that up for you. In the meanwhile, let's also talk about Tata Motors, because this is a stock that is gaining ground. Let's pull up the chart and see where it currently is. Last I looked at it, it was up about 3.5%. It is now at the high point of the day, up as much as 5%. An upgrade is coming through from Nomura, and in fact, it has upgraded its target price. It has upgraded to buy, and there is a considerable upside that they're seeing in the stock. We've got Puneet joining in to give you perspective on what Nomura is saying. Puneet, considering that Tata Motors is trading where it is, the fact that it's showing a 26% upside from there is quite significant.
Yes, definitely, Alex. And big brokerage update coming in from Nomura. They are seeing that, they've upgraded from a neutral rating to a buy, taking the target price up also to 1,294 rupees per share. This was earlier at around 1,191 rupees per share as well. So 20% upside from current levels, 26% upside from the previous close. So really strong brokerage. And this is coming on the back of two major divisions that they are very positive on. The first one is, of course, Jaguar and Land Rover. They are mentioning that, the brand is embarking on a luxurious journey going forward as well with new product launches. They see Jaguar's execution can lead to superior margins for the company and a significant upside for Tata Motors in general as well. They are seeing that JLR division's earnings growth will be led by higher average selling prices as well as margins going forward. For FY25 specifically, they are penciling in roughly 8.5% EBIT margins, which is higher from 7.8% in the previous year, and are expecting this to cross double-digit margins the first time in its two-decade history after it was bought. In FY27, they are expecting it to be around 10 to 11%. So really strong margins. This will also be supported by the transition of Jaguar Land Rover into the EV space. They are expecting Jaguar EV to come in this the next 3 to 4 quarters, and by then they will also be premiumizing the Range Rovers, which they'll be launching over the next 2 years, which will support margins as well as revenue growth going forward. They are mentioning that they've raised their EV by EBITDA multiple to 3.5 times for JLR. This is up from roughly 2.7 times, and that's coming in the share share price as well as the target price for the company. They also said that, in the India PV division, the passenger vehicle space, they are launching the Curve on the 7th of August, which will be the the third EV for the company after the Nexon and the Punch, and are also expecting the Harrier EV to come in by the end of this fiscal year. They've also raised the multiple for the commercial vehicle division to 11 times EV by EBITDA, which is a key positive for the company. So overall, multiple divisions and multiple strength for the company going forward is what Nomura says. Back to you.
Absolutely. Thanks so much, Puneet, for getting us those details. Arguably the stock of the day, at least in terms of the outperformers in trade today. Let's talk about the update from the Supreme Court. In fact, we've got NDTV's Sunil Prabhu joining in to tell us about what the top court said about the royalty issue. Sunil, what can you tell us?
Well, it's a historic day in the Supreme Court. A 9-judge bench, a constitutional bench, has given a verdict 8:1. 8 in favor of saying that royalty is not a tax, led by the Chief Justice of India and 7 other judges. They have said that royalty is not a tax. This is a big victory for states, especially mineral resource states. A very categorical statement saying that the purview is within the states and the state legislature to levy this royalty or a tax in, and that the land comes under the state list. The state legislature has the power. What does this mean? This is a big loss for the center as well as for mining companies. They will have to pay that royalty that has been imposed by states. The big question, of course, is when will this be decided by the constitutional bench, which is going to once again hear this matter on whether it should be done prospectively or retrospectively. Because this, as you know, has been pending for 9,000 days. Since 1999, this matter has been pending in the Supreme Court. There have been a number of judgments, and finally, today, there is a finality in terms of being the arbiter of justice. The Supreme Court, 8:1, have held that royalty is not a nature of tax, that it is within the power of the states to levy royalty. It is a contract between the lessor and the lessee, and that the mining land comes within the jurisdiction of the state. It's a state list. So this is a big decision which has far-reaching implications, even economic, for various states, especially those from the mineral resource rich states like Odisha, Jharkhand, Chhattisgarh, and that list continues.
Right.
Having said that, there is a dissenting judgment of Justice Nagaratna, who has very categorically stated that one way or the other, this will have a deleterious impact on the federal system. We'll have to wait and see how things play out. The Supreme Court on next Wednesday will decide on this important aspect of whether the tax that is now going to be levied on people, whether it will be done prospectively or retrospectively.
Yes, thank you so much, Sunil, for getting us those details and that perspective. On that note, let me introduce you to the experts, the guests that we have on this program today. We've got Sameer Dalal of Natwarlal and Sons Stockbrokers, and we've got in studio Kush Bora, founder of kushbora.com. Thank you so much, gentlemen, as always, for taking the time. Sameer, I'll come to you first on this latest judgment. Of course, we're still trying to understand the implications broadly, but on the face of it, seemingly, royalty payments by miners could go up. That seems to be a negative, of course, and the stock price reactions seem to be suggesting that. Is that something that concerns you at all?
Obviously it does, right? So if royalty has to go up, that's a bigger cost to the producer of the metal, and that means they're eventually going to pass it on. So that can be a bit inflationary also in nature. So on both fronts, it's not good. One for the company because they have to hire costs, which means they have to pass it on. And if they are unable to pass it on, it means margins shrinking for them. And if they are able to pass it on because imports are a little, there's a difference between the import price and the local prices, then inflation is going to get affected. So either way, I mean, increasing royalty, it's great for the government because government is trying to collect tax in every given angle, but not necessarily for the end users or the economy or the company.
I call on any of these miners?
So I don't have a view per se. Let this judgment come out eventually, then we'll take a call. But at the moment, given the way China's situation is, I am actually a bit negative on the entire metals and mining space. So NMDC, Tata Steel, especially Tata Steel, Vedanta, who are fully backward integrated and who are doing the mining activities. So if commodity prices come up because of the China slowdown, these companies get affected the most because they benefit the most from the increased vertical integration and the profitability. But if either the royalty goes up or the prices come down, it's a negative for them. So I'd be wary a bit for a few of them.
Wait and watch. And of course, next Wednesday, as Sunil pointed out, is a day that you should watch out for in your mark as well. Let's jump to the queries. And in fact, the number that you see on your screen, that's where you can send them to us. Quite a few of you have already written in. Do remember, if you're writing in for the first time, to tell us your name as well as your location. It helps us identify you. And of course, you to identify when your question is taken up. Before we jump to the questions, I have a quick question for Kush. Kush, of course, today is expiry day. What are the key trends that you're looking at? What are the key levels for the benchmarks as well as Tata Motors? I'm quite curious. We've looked at the fundamental view from Nomura, but I'm curious what you make of the up move today and what the potential upside is.
Hi, Alex. I think the markets were waiting for a trigger, or rather, the big event to get out of the way before giving that, correction or that meaningful pullback. I think we're starting to see that. Bank Nifty had already shown cracks. Nifty is starting to show. Today being the expiry, looking at the call and put setup, I think the 24,300 mark has a substantial put base. That should hold on. If not, then the pain for the writers is going to be, a little exaggerated. So I think 24,300 for now should hold on. But I have a feeling that, this downtrend could continue. The 20-day moving average is taken out. If we close below that, then I think the lower levels of somewhere close to, 23,900, 23,800 zones will open up for the Nifty. Bank Nifty is testing the 50-day moving average. I think with the Nifty expiry impact, this might also perhaps hold on to that for some time. But any meaningful support on the Bank Nifty, 50,000 is the more psychological mark. Any meaningful support on the Bank Nifty comes in at 49,600. So that's a level that, I'll watch for if, 50,800 is broken and we close below that today.
All right. And Tata Motors?
On Tata Motors, surprisingly, the stock was actually just consolidating for the last month, perhaps even, two. But the bias wasn't really as bad. We've had those dips in the stock that were actually bought into. I think there's a very similar structure on M&M as well. Maruti is an exception. So if I were to pick actually two stocks in the auto space, Tata Motors and M&M would have been the two. Now we've already seen a bit of a run up. From a trading perspective, I think there's still room until about 1120 kind of levels. So if you have a long position, continue to hold on, trail your stop losses to 1050. For new positions also, you could use these levels. 1050 is where you place your stop loss. 1120 would be your first target.
All right. We've got the first question today coming in from Shridhi Nath, who's asking about Banco products, which he's bought at a price of 715.95. Let's pull up the chart and see where it's currently trading. And he's looking for a long-term view. He's wondering whether to hold on to this. So he's losing a little bit of ground, not too much. It's currently trading at 683 or thereabouts. Samir, do you have a fundamental view on this particular counter?
Fortunately, we don't. Sorry.
Okay, fair point. Let's pull up the charts and see where it is then. Kush, would you say that he should hold on to this?
Well, the near-term trend is certainly not as encouraging. The 20-day moving average is barely held on to. So, my suggestion would be that, if your view is indeed for the long term, I'm assuming that, you've kept some margin of safety and that comes in at 630 for me. The losses will be slightly deeper, but that gives you a chance to hold up and for the stock to rebound. So, you could continue to hold on, but have a very strict stop loss at 660.
Okay. BEL is the next counter that we're talking about. And in fact, Pinkesh from Surat in Gujarat is asking this next question. He has bought at levels of 272 and he's wondering whether to hold or not. Let's pull up the chart and see where it's trading. In fact, at 302. This is one of the counters that has gained quite significantly over the course of the last year or so. Samir, on the fundamentals, does it warrant a hold or would you say take money off the table?
So I would say book some profits. So, a lot of these defense counters have done extremely well. BEL is no exception. The stocks have doubled and some of them have even tripled, including the likes of BEL over the last maybe year and a half. Now, what has happened with this stock moving up is the valuations have expanded quite significantly. So if earlier we were at massive undervaluation, I think we are at about fair valuation right now for a lot of the counters, including BEL. I don't deny the fact that the defense sector is going to see great growth opportunities over the next 3 to 4 years. But I think that is the fact that the growth everyone knows is going to come because of the government impetus given to the defense, where you will have certain amount of products made in-house, even if it's bought from international markets, and even themselves directly selling into the defense industry. The fact is that all of this positive is factored in. So for a significant re-rating to happen from here seems a little difficult. So I would say you can book some profits in the stock. If you get corrections closer to the 240, 250 levels, I would rebuy it.
Paras Defense, another counter in the defense space. We've got Kunal Bansal, who's bought at levels of 1,277, not too far away from the current market price. He's got 70 shares. He's asking whether to hold or exit. Kush, on the charts, what does it look like?
Well, my suggestion would be to book this one out. The near-term trends for sure turned a little negative. However, on the technicals, what we follow as a gap theory, there's a gap right up until 1170, 1160 kind of zones. So there's a possibility that the stock could head down and fill that gap up. So if and when that happens, Kunal could be in a loss. So my suggestion is to book this one out. Let the falls settle. Let the stock show you that it's perhaps done and dusted for now and attempting a rebound. That's when you re-enter. But for now, my suggestion would be to exit this one.
All right. And now we will take several more questions, but we have to slip into a very quick break. We've got more on the other side, so do stay tuned. Welcome back. You're watching Ask Profit. Let's jump straight back into the questions. And this next one's interesting, not just because it's an interesting stock, but also because what Mr. Sastamani has to say about Kush. He's asking about Glenmark Life Sciences, which he's bought at levels of, he's asking when he can see prices of 990. He's writing in from Coimbatore, by the way, and he's saying that he wants Kush to answer this. And he thinks that Kush reminds him of Devanand.
That is some serious compliment. That is some serious compliment. Thank you so much, Mr. Sastamani, for that. And if only I could accelerate Glenmark Life Sciences movement on basis of that, I would have. But no. On a serious note, the stock's actually in an uptrend. It's in a bit of a consolidation range, so the momentum is missing, but the trend for sure is positive. What is also acting for this is that there is relative strength. When the markets aren't doing well, the stock is. So there's a possibility that the 950, 900, 990 levels could be reached, for this stock in perhaps next 3 to 5 months. So that's the time horizon I would have. But in any case, if you have the stock, not a bad idea to continue holding on. Even though slow, the stock's actually in an uptrend.
Got it. All right. The next one is from Brigu. He's writing in from Punjab. And he's looking at ITC, and his maximum holding period is short, 2 to 3 weeks. And he's bought at levels of 490. So it's a stock that has gained post the budget, of course, because no negative news is positive. But Kush, on the charts, 2 to 3 weeks, should he hold on? Well,
hold on with a very tight stop loss. It's because there's a rounding bottom formation that's being completed on the weekly basis, and that happens once the stock closes above 500. We're not seeing that. The stock's not sticking above that level. So there's a possibility that, it might dip. In any case, it's a good stock to have in terms of the margin of safety. So 475 is where you place your stop loss and you hold on to this one. Once the dust settles, around the budget and the market settle a little, the stock could continue its move upwards. The momentum will pick up after 500.
Okay. This is a question for you, Samir, and it's a broad-based question. This is Pankaj Kumar, who's writing in from Visakhapatnam. He says that he's a beginner and he wants to invest a lakh of rupees in the stock market right now, and he's wondering where to put it. Right? So people, if you, like you have been saying, that valuations are a little bit stretched in a few pockets, but are there opportunities to deploy right now?
Oh, absolutely. There are always opportunities, right? You will always find something that is attractive. So one of the stocks you just discussed right now, ITC, if you ask me from the next 3 to 5 years, I think that's a great investment to make. So first of all, I would tell you, the person asking the question, please identify maybe 3 to 4 stocks. Don't spread yourself beyond that for the simple reason the amount is not very large. But stick to the blue chips in the initial days. Even right now, the valuations are better for the blue chips than they are for the mid cap and the small cap. So don't chase after momentum right now. Buy HDFC Bank. I think that is attractive from a 2 to 3 year perspective. ITC looks attractive from a 2 to 3 year perspective. Bajaj Finance looks attractive. And then you can look at something in the auto space. Unfortunately, a lot of them have already run up, but on corrections, something like a Mahindra and Mahindra might be an interesting play. So stick to the larger players right now. Don't go beyond 4 or 5 stocks, and I think you should be fine.
Exmaco Rail is the next counter. Jagdish is writing about this, and he's bought at levels of 288. He's wondering whether to hold or sell. Kush, on the charts, Texmaco Rail, how does it look?
Not too bad, despite the kind of correction that we've seen in the last couple of sessions. I think the stock could perhaps hold on to the support zones of 245, 250. And consolidate. You may not see a very big bump up almost immediately because the near-term triggers are missing, and there's the 20-day moving average pressure that the stock is facing. But it's not as bad as it could have been, given that there weren't any major announcements in the budget, and the stocks really recovered after the fall that we saw on the budget day. So from my perspective, continue to hold 250. Use that as your stop loss. You could be in for a bit of a waiting period, but I think it's one stock that you can still continue to hold.
Okay, I'm coming back to you on Bank of Baroda, and this is a question coming from Mahalakshmi, bought at levels of 279 for a period of 3 months. Is it possible to get my money back? So 279. All right. So there is a bit of a gap on Bank of Baroda. So 3 months, would you hold or would you book losses at this juncture?
Mahalakshmi, I think you've picked the weakest of the PSU banks, at least on the price performance. There is SBI, Canara Bank, perhaps even a PNB. Bank of Baroda has had its share of issues. We've seen a lot of recovery, but again, the recovery is not sustaining. The stock's taken a big knock. It is perhaps the weakest of the PSU pack. My suggestion would be to exit for now. Although there is a near-term support at 238 in case you want to hold on to this with a tight stop loss, but there aren't any real triggers, at least on the charts, that suggest that 275 perhaps could be visited anytime soon. So my suggestion: exit for now. Let the stock settle. We'll see when to re-enter and when to buy again. But for now, exit.
All right. The next question is on BSE, and it's for you, Samir, and we've got Vijay Reddy from New Delhi who's asking whether this is a good time to enter the stock. It's trading at 2,478 levels. And based on the kind of increase in participation in the stock markets over the last 3 years or so, a lot of people are betting on this counter. Would you be one of those?
So at the moment, no. I'll tell you why. There are two very clear reasons. The first is that SEBI is looking to reduce the weekly contracts. And if you see in the F&O segment, BSE has a very small market share at the moment. And that too, whatever is happening on the weekly expiry days. If you see, there's not too much more depth in BSE at the moment. So if SEBI does regulate few options trading on the weekly side, I think that could be a hit to its profitability. A lot of positivity had come because they had managed to get some amount of market share in the F&O segment. But if they are not able to launch the same number of weekly expiry contracts and get this volumes on those two particular days, I think that could be a bit of a setback. Second, this is a very cyclical business. You see, we've had a period of maybe 3 to 4 years of very high increase in turnover on the exchanges, and that cannot sustain. So there will be a point, maybe not now, maybe not in the next 6 months, but in a year's time, where you will see a correction and where the activity on the exchanges will dwindle. And the minute that starts happening, what you will see is the valuations will start looking a lot more expensive. Right now, a lot of people are factoring in a lot of growth. But if that growth does not pan out, then valuations start looking expensive. You could see the stock correct. So I would be in no rush to buy BSE or any of the other exchanges at this point of time.
Right. We have time for one quick question. IDFC First Bank and Zomato are the two stocks that Shivananda has identified. He's got a significant quantum of 25 lakhs that he can deploy. He's looking at a medium-term time frame. He's asking if we should get into these two. Kush, what's the view?
IDFC First Bank is a very clear avoid, on my radar, and Zomato is still something that you can buy. The only thing that, the stocks run up, so do it in a staggered manner, especially, if you've got a lump sum amount, always advisable to do it in a staggered manner. Zomato is a buy, IDFC First Bank is an avoid.
All right. On that note, Samir as well as Kush, thank you so much for joining in and for answering all the questions that you did answer today. And that brings us to the end of this edition of Ask Profit. It's been an absolute pleasure bringing it to you. We will be back tomorrow to take more of your questions, so do tune in at 11:30 a.m. And there's lots more coming up over the course of the day. Do stay tuned. This is NDTV Profit.
Hello and welcome to NDTV Profit. You're watching Earnings Edge and this is Expiry. But before we move on to the conversations that we are going to have with companies, let's just take a look at how markets are faring right now. Well, we have the Nifty 50 down 0.2%. And, when we talk about, what's dragging the benchmark down in terms of point contribution, if you could just have that, the contribution of the Nifty 50 counters on the screen below. Well, there you have it. You have Axis Bank and ICICI Bank and Infosys dragging the benchmark down. The ones that are, contributing positively, you do have L&T, Tata Motors, as well as HDFC Bank. When you talk about in terms of stock performance, you have Axis Bank, which is the top Nifty 50 loser, down 6%. This was on back of their earnings. You also have Nestle and Shriram Finance down almost 3% in trade right now. The stocks that are doing well are Tata Motors. It's up almost 5% in trade today, as well as you have some oil and gas counters like ONGC and BPCL, both 3% up in trade today. When you look at the broader markets, let's just take the Nifty's small cap 250, which is down about 0.2% as well. When you talk about the counters that have, been on the negative side, we have JK Paper. It's down about 7% in trade today, as well as RBL Bank, Garden Reach, and Chalet Hostels, all down 3.5%. The stocks that are doing fairly well on the Nifty small cap, we do have MMTC. It's up 14% in trade right now. We also have defense counter Data Patterns. That's up almost, it's 9.5% in the green right now, followed by Jyoti Lab, and Godfrey Phillips. When you look at the, let's just take a look at the sectoral indices, and we have the Nifty Oil and Gas, which is the top gainer right now, and the Nifty Metal Index is what I want to focus on, which is down in trade today. We also had, the Supreme Court overturn a ruling that basically gives state governments the right to levy royalties on minerals extracted on the mineral-owned lands in the respective states. When you look at the Nifty metal counters, mostly all of the constituents in the green except Adani Enterprises. We have JSPL down 3.36%, Welspun Corp down about 3%, as well as SAIL and Hindalco seeing negative, action. When you talk about the Nifty Oil and Gas and what's gaining, over there, we have Oil India, which is up 6%, almost 6% in trade right now, followed by, you have your OMCs that are in the green right now. You have HPCL, IOCL, and BPCL seeing gains on all these three counters, as well as ONGC, which is up 4% in trade today. We'll also look at Nifty Media, which is another sectoral index that is buzzing, in trade today. And when you talk about what are the gainers on the Nifty Media Index,